Okay, today's lesson is continuing with the theme of personal finance, and we're going to look at payslips and salaries. Okay, first of all, a little look at some example payslips. These are all made up ones from the internet. And you can see there's 4 different types here, but they all have a similar sort of structure, similar sort of layout. We've got this section here, which is what you've been paid. So you've got there, here on this one. This one is what you've been paid here, and this one at the top is what you've been paid here. Then you've got another section which has your deductions in, so what's been taken off your salary. One in the middle there, the right hand side here, and underneath down here. And then you have a summary of the year to date. Okay, that's what YTD means there. So the amount that you've been paid in total, the amount you've got taxed in total, etc. Same over here, same down there. You haven't got one on this one. And then overall sort of net pay with some other information here. Okay, so more information up here, and then with your pay summary down here. And on this one, overall net pay, extra information. Okay, right, so we're just going to talk through some of those elements in a little bit more detail. So what are the different ways that you can be paid? Okay, so first of all, you could have a simple salary. So for example, a teacher gets a simple salary. You can see on all of these here, on this first one here, you've got a simple salary of what you've been basically paid. Okay, lots of jobs have simple salaries. So for example, like a teacher just has a simple salary, lots of government workers, but lots of just general jobs, and they'll tell you what your salary is for the year, and they divide that between the 12 months, so you get paid the same amount each month. Okay, you could also be paid on an hourly rate. Okay, so quite often part-time work is paid on an hourly rate. Your hours could be fixed, so you're told you know how many hours you work in every week, and that's what you pay the hours that you're paid for. Or they could be flexible, so there's certain jobs which don't have the same amount of hours each week. You might be on an on-demand basis. Okay, so you work a certain amount of hours and you get paid for whatever hours that you've worked. You could have overtime hourly rate, so this could be on top of the salary. So if you've worked longer in a day, then you get paid overtime. Same, but it could be the same in an hour with your hourly rate. You could be paid extra if you've worked, for example, on a bank holiday, or maybe on on Christmas Day. You get paid extra potentially, or there could be additional hours. So there might be extra things that you do as part of your job which aren't included in your basic contract, and which you're paid an extra additional hours over rate. Okay, then the third way, you might be paid by the job. So certain jobs are paid on the job. It might be something like a gardener or a builder. They get paid for what they actually do. Fourth, certain people get paid bonuses, or they get paid commission. So salespeople, for example, for every sale they make, they might get a certain amount of commission on whatever, so a certain amount of percentage off that sale that they've made, or they might get a bonus if they've done a certain amount of sales. Lots of jobs have bonuses, and certainly in the past, maybe not so much at the moment, but certainly in the past, lots of jobs have had sort of a Christmas bonus, or an extra little bit of pay just before Christmas time, so you can pay for your Christmas presents, etc. Or if you've had a really good year, your work places or your team has had a really good year, you might get paid a bonus. And then finally, another way that you can get paid, which lots of jobs have these, certainly in the past, little perks in terms of travel. So you might get paid mileage on your car. You might be get paid a certain amount that goes towards paying for your car every year. Or at the moment, you can get extra expenses for working from home, because obviously if you're working at home, you have to have the heating on for longer in the day, that sort of thing. So there's little extra expenses that you can get paid there. Okay, so that's all in this first section here. So you can see salary, bonus, commission, expenses, hourly rate, basic hours, different rates of hours, etc. there. Very similar on the other ones. Okay, Then there's the deductions to your salary. What are the different things that can be deducted from your salary? So one would be income tax. Now we're going to have a lesson in much more detail on income tax and national insurance and student loans and pensions later on. But yeah, basically income tax gets paid directly to the government and it goes into the government coffers, which they use to pay for public services of certain types. And then you also have national insurance. So national insurance has various contributions towards particular types of service and pensions as well, which I'll talk about in more detail when we do national insurance. Student loan. So if you go to university, you obviously incur a student loan. This isn't paid back straight away. This is paid back through your salary over a number of years, potentially over the lifetime of your job, depending on how much work you get. And I'll talk more in detail about that when we do it. Pension. Now, most people now have a pension, became law to offer. So every employee had to offer a pension scheme, although you didn't have to take it up as an employee. So most people do put some money aside towards their pension, which you obviously pick up once you finish your working career. And then additional benefits as well, which you might have to pay for. So, for example, lots of people might pay a little bit towards health insurance. Okay, so if they get ill, they can maybe get some private healthcare. Quite a common one is a bike to work scheme. So you might, the government run a scheme where you can buy a bike through a loan from the government, and then you pay it back via your salary, which is you pay back before tax. And then some people pay extra things for stuff like union fees and that sort of thing. Okay, so all of these get deducted from your basic salary. Some of them get deducted before the income tax is added. Some of them get deducted after the income tax is added. Okay, right, going on to a few more things that came up on those pay slips. So a few terms that you need to know. So I'm just going to type in the definitions on these ones now. Okay, so gross pay is the total amount you're paid before tax. Net pay is the amount you are actually given once tax has been deducted. Okay, so those are key terms on your payslip that you need to know. Okay, this one isn't not necessarily going to be on your payslip, but you need to know it for the next thing. So the Hmrc stands for Her Majesty's Revenue and Customs, and this is the government's department that deals with anything to do with taxes and pay, etc. Okay, so you pay all your taxes to Her Majesty's Revenue and Customs. The reason I said that is because your PAY, that stands for Pay As You Earn, and that's run by Her Majesty's Revenue and Customs, Hmrc, and it's basically a way that employees actually pay your salary. Okay, so it's a system they use to pay your salary. So all the taxes and deductions and all that sort of stuff goes through PAYE, and those pay slips that we looked at earlier are standard PAYE pay slips. And then the final one, which came up on one of those, is BACS, and that stands for Bankers Automated Clearing System. And that's a way of digitally paying your salary. So back in the day, they used to pay you in an envelope, or they just gave you the money. Quite a long time ago, that changed to BACS, where your employer would pay straight into your bank account. Okay, and that's run by the Banking Association. Okay, so that's pretty much it for pay slips. Now, there's a few other terms which you may come across in finance, okay, which I'm going to go through now. VAT stands for Value Added tax, and that's a very common tax which is paid on things that you purchase. So it could be an item from a shop, or it could be a service that you purchase, and it's various percentages that you pay on there, but the most common one is 20%. So that's a tax that we all pay. Annual or per annum, this came up in the last couple of lessons, and that means yearly or every year. Biannually, that means twice a year. Quarterly, that is 4 times a year. Okay, so that might be how often you make repayments on a loan, or how often you're paid interest on your account. Debit, okay, so that is an amount removed from your account. And credit is an amount. Let's actually put that at the front. Added to your account. Okay, so debit is when you're paying for something. A credit is when you're being paid for something. Okay, and the balance is the amount in your account at time. Okay, so if you're looking at the balance of your account, if you're in credit, quite often you say you're in the black, and it will tell you how much you've got in credit. If you're in debt, it's when you say you're in the red. It's how much you owe to the bank, how much you borrowed from the bank. Okay, and the final term, which we haven't really talked about at the moment, is GDP. It does come up later, and that means gross domestic product, and that's the amount of total wealth that a country or a system has earned. Okay, that's it for the terms for today. So this is the task that I want you to do. Okay, what I want you to do is go back through today's video and the previous couple of videos that we've done, and I want you to make a glossary. Okay, so go back through the videos, look at and highlight the key terms that we've and acronyms that we've talked about, and then in the back of your book I want you to make a glossary of each of these words. So I want you to write the definition in your own words so that you know what they mean for future reference. Okay, that's it from me for today.